Welcome to the enterprise stage, Pitchday, Bitcoin 2022. Really excited for the slate of Bitcoin startups that we have presenting today. This is the first block of those startups, 7 companies. The topic here is mass adoption. So that's companies that are building tools to onboard new users into Bitcoin, whether that's kind of novel new products or products hitting a new market. So we're excited to kick things off. Great panel of judges all day. So our first 5, I'll let y'all introduce yourselves briefly, just name and company, and then we'll hand things off to CoinChange and Max from Canada in their first pitch. But first, the judges, you can introduce yourself, starting with David.
Hey everyone, it's David here from OP Crypto. Was previously leading global strategy and investments at Huobi before starting this venture fund. Thanks.
Hey everybody, it's Vikash Singh, Stillmark Capital. Previously was an AI software engineer at Google X and led AI at a health tech company called Heal.
Hey everyone, this is David Roebuck. I'm the venture principal of Wave Financial. It's a $1.5 billion crypto investment advisor.
Hi, this is Greg Carson, managing partner at XBTO Humla Ventures. We've been investing in the space since around 2016.
Hey everyone, this is Cassie, Clifton. I help run a small hedge fund in Nashville, digital asset fund, UTXO management.
All right, thanks judges. And now to Max and CoinChange. All right, Max, kicking things off, a lot of pressure here.
Thanks. Hi guys, Max here. So first thing you do when you come from Canada to Miami, you go to the ocean, right? So today in the morning, was a bunch of guys from the team who went for a nice swim. Very grateful to be here. Very happy to talk to you. So today in the morning when we were at the ocean, I'm thinking like, okay, how can we make this live every day? Work class, enjoy more, right? So that's pretty much what we do at what we try to facilitate with CoinChange. Do you guys see the slides? Yeah. Okay, I don't see the slides here. I just see myself. Which slide are we on?
Our high yield architecture.
Okay, so I'll go back. Sorry, I didn't see the slides here. Yeah, we'll start here. So thank you. So I can see the slides here right now. So we say that we are automated DeFi wealth management, but in reality, we aggregate layer 2 yield across 5 blockchains. Okay. We accept the deposits, or we accept the transfers from our clients into CoinChange. Then we feed that liquidity across 5 blockchains into the liquidity pools, into the staking pools, into the lending pools. Okay, it happens across 15 protocols right now, 5 blockchains, and about 30 pools. So to do that, it's really hard to do it manually. So we built an orchestration, and that's a platform layer that's based on data, models, and universal cross-chain execution. So data, we extrapolate data from the nodes, we analyze it, we clean it, we build a feature set, and on that feature set, our quants build models that can extrapolate the yield from the protocols that we supply liquidity to. Better? Okay. Can you hear me like that better? So it sounds really complicated, right? We try to make it in a very intuitive and easy way for the customer to just download the app, take a selfie, register, transfer the funds. We can accept funds in fiat and in crypto. We're operational in 27 states right now. So to make it available for everybody to democratize access, we don't have any minimums. So you can transfer $5, you can transfer $5 million, you can leverage your house, transfer 50, not recommended. Mm-hmm. So there's no lockups. You can take liquidity right away, the next day, in 5 days, and there's no fees. So it's all possible because we don't really lend the assets. We don't trade on the assets. We don't replicate them. We provide them to liquidity pools, staking pools, lending pools, and they're always under our control. Because that orchestration layer enables us, and it automatically moves that liquidity between different pools to maximize the yield. The pools and the assets that it's swapped between is pre-selected. Okay, so we really, for that, so those 30 pools, 15 protocols, 5 blockchains, they go through a certain process of underwriting, per se, right? So our risk team analyzes if we should connect that pool or we should connect that asset or that protocol. Yeah, so as been said, I mean, we launched last year, summer, so been paying yield for 10 months since then. The first thing that we did when we thought about the business in summer 2018, looking into the DeFi, it was about 50 million back then, we thought that it's going to grow. If it's going to grow, it's going to get regulated. If it's going to get regulated, it's going to become compliant at a certain point of time as it grows, right? So right now, I don't know, it's about $180 billion. So from the first day, we hired the legal counsel, we integrated with a bunch of partners, we registered with Fincheck and Finnt, and we decided to do the financial audit with Grant Thornton. So right now, to enable, I mean, obviously compliance, we have a bunch of partners like Jumio, KYC 2020, Chainalysis, Fireblocks is a wallet manager for us. So there's a complicated architecture of the application itself, and even more, probably a comprehensive platform to aggregate the layer 2 yield, right? And it's all right now primarily available for the retail customers. So in 27 states, you guys can download it right now, use your ID, take a selfie, then transfer your funds and start earning compounding daily yield. We also started selling B2B directly to businesses about a month ago, and we already have about 12. It's mostly crypto businesses, so NFT marketplaces, play to earn, crypto miners, and we have about 12 of those crypto clients right now as a businesses, right? A couple of them wanted to have yield as a service, so meaning reselling that yield to their customers through their own wallets or through their own application. So with 2 customers, we're working right now on the integration of our yield into their ecosystem. It's a neobank out of New York, and it's an exchange out of Israel, to enable their customers to enable them to resell our yield to their customers. So pretty much like an API layer, right? But it's still in sandbox. We're still in development. We're going to productize it probably in July. So we launched, as I mentioned, summer. That was a web app. The mobile apps came to market in November. So since then, we have about 120,000 registered customers, 60,000 KYC customers. 94% of our customers are from the US. We raised about $5 million last year, and the deck was put together last Wednesday and submitted. We had 20 million AUM, but we are at 35 million right now. So our team is 70 people across the world. We're pretty distributed. We don't even have an office right now. The headquarters is in Canada. We have a full subsidiary in Delaware. We have a subsidiary in Poland, and we're a team of about 70 people. 45 of that is on the product side and tech side. So that's pretty much it. Become a changer, join CoinChange, and start earning compounded yield with no lockup. Thank you, guys.
Questions? I'm curious, can you just talk just 2 seconds about the team, like the leadership team's background?
Yeah, so me as a CEO, I mean, I don't know if you want to, probably it makes sense to talk a little bit about myself right on the background. How did we come to the start, right? How did the idea start?
No, I was looking at the experience of you and your other team members.
Okay, so I went to the U of T, University of Toronto, did computer science and electrical engineering degree. This startup is probably number 4 for me. 1 was sold, 2 we failed. I ran a small venture fund called BGS in 2011 to 2015. It's a $10 million VC fund. So Oleg, he's 55, has about 30 years experience in banking, and he's a computer engineer out of Waterloo. Peter, around 45, used to work at BlackBerry, Rogers, and at retail in Glenbury. Vadim is our chief science pretty much guy. He's a PhD and right now runs a team of about 7 PhDs with him. Primarily guys like 27, 35 years old, around 30 years old. Yeah, he's been in data before, so they ran a small shop that was selling data to hedge funds, private equity funds, and he came up with the idea about DeFi per se, because they were looking for the data already, and we kind of joined forces to build this. So it was 2018 when we had the idea. 2019 we actually started working on the product, so it took 2 years to get it to market.
Thanks.
I guess like just curious to see like what the yield rates look like and how does it compete with some of the other competition out there.
It's a great question. So, I mean, you probably guys know better than I am right now. There's two different types of yield in the market. So one of them is like interest, right? So Nexo, BlockFi, Celsius, more on the lending side, right? So there's also Arcadico, us, Switchboard, or work more in the DeFi yield aggregation. So Celsius and the others, they stepped into the market as soon as banks started lending against crypto, right? There was a demand. So we're stepping in right now with a new paradigm of DeFi, right? Because we also see that there's a window of opportunity today, right? And I believe personally that lending is going to get more commoditized, more saturated as a market eventually in the back, like where there's going to be more players and banks will start lending against those assets. So on our side and in DeFi, I mean, we have a small research team that feeds those opportunities into the quantity timeline. So there's always something new that happens in this marketplace, right? We believe that speed of innovation, there's always going to be new earning opportunities. We have to just pre-qualify them properly, right? On the risk framework, making sure that there's a bunch of questions, about 80 questions that risk goes with that. So on the yield, our yield is higher right now, but yield doesn't go without the risk. We're going to get 50% yield, 100% yield in DeFi, right? It was everything. So we try to have a very kind of risk-hedged approach for yield. So that's why all the liquidity is spread out across 30 protocols, right? You can put everything in Terra and make 24% of it, 25%, right? When we do have some liquidity on Terra today as well. But we spread it out across Uniswap, Aave, Pancake, and the other protocols to make sure that it's well diversified. There's also thresholds of liquidity we can set, right? So yield always comes with a risk with us, with anybody in the market, right? At any yield. And we try not to go to 25, 30% yield. So ours right now, if you look at the site as well, it shows you 24-hour yield, 7-day yield, and 30-day yield. Yesterday, I think, the yield was around 14, 15% for the customer. So about 30 days, it's 12, 13%. But this is daily, right? It's all based on the activity on those pools and the fees that they generate, right? It's not like we're lending out the asset to a third party, have a contractual obligation we have to enforce, it's not returned. It's all there under our control. Because the orchestration moves that automatically. It's not like Max sitting there pushing in and out from the MetaMask. It's all done through that orchestration layer. So we can always pull the liquidity back, and it does swap automatically between different pools. And when we get the LP token, we can boost the liquidity to staking and lending on a daily basis. Then it goes back in kind into your wallet on our platform every day. So if you deposit USDC, you're going to earn in USDC every day in kind into that specific wallet. But what we do, what the platform does, it feeds it into the LPs. Then it can boost the LP token to staking that LP token or lending it, and then selling and going back in kind every day. So the yields are better than lending right now, right? How sustainable is that? How far the market can go? We believe the market is going to grow. We believe there's going to be new opportunities. As far as you have the process to make sure it's risk adjusted, we should sustain those yields. Does that answer your question?
Yeah. So I guess like to follow up, like what would be the risk adjusted return for this compared to like lending? Because obviously you're taking a much higher risk, and if any one of the protocols ultimately get hacked, like what?
I won't quantify the risk as a much higher risk or much lower risk. It's really hard to quantify the risk if it's not mathematically derived as a on the strategy side, right, on the market risk. If you look at the stable coins, the market risk is mathematically close to zero, right? Because there's very little impermanent loss, and there's only depegging from $1 you have to take into account, right? Right now, the yields for yesterday was about 14.2%, right? That day, because every day is different, okay? But touching upon the risk again, I won't say it's more risk than a centralized lending. Because with centralized lending, you are exposed in a certain way to market risk as well, right? Because those assets are lended to traders, exchanges, people who generate alpha, right? So you are exposed to risk indirectly if you use any yield platform. It's just a different type of risk. It's like comparing mortgages, and the Australian forex. So in our way, the DeFi risk primarily is a technology risk. The pool is going to get hacked in a single block. It's going to get drained, right? So that's why we have to pre-qualify every pool, every protocol really carefully. Because the drainage even of the pool is controlled by that universal execution that the pool liquidity out if the threshold is not met. Right? So the only risk, I would say, the major risk is the technology risk. That's why the process of pre-qualifying has to be vetted by a third party. Like we work with Consensus. right now, because we use a framework, a DeFi risk framework, to build out. So,
Max?
Yeah, so on my end, ultimately, when you're lending liquidity to an automated market maker, some liquidity pools, there's a diverse sort of action space that you can take, asset mixes, concentrated liquidity, and ultimately your modeling team is likely kind of modeling, the returns that you could get, right? Ultimately, you can collect the data set and, model that as it's not really a function that's defined in closed form. But as you're sort of doing this across many protocols, are you guys additionally sort of tracking changes of the protocol itself and sort of how that bubbles up into the kind of returns that you're getting?
exactly. We call it a strategy funnel. So there's a research team.
Let's do a 20-second answer here.
Yes, so we do track that. Yeah, obviously, because there's a research team who tracks and pre-qualifies the new earning opportunities as well as the existing ones.
Awesome.
So it's like a strategy funnel that way. Thank you, guys. Thanks a lot.
Thanks, Max.
Thank you.
Good stuff. Thanks for kicking us off. Good questions. All right, next up, we've got Anji from Fint. Miami-based, which we love to see.
Thank you. Hey, hello everyone.
You can hold this if you want.
Which is the one for moving? Oh, I think it works. I don't need this. Thank you. Hello everyone. Where is my slides? Oh. Yeah, my name is Anji. I'm the co-founder of Fint. So quick question before telling you more about what we do. So can you raise your hand if someone you know, your friends, family members, ever ask you when to buy Bitcoin? Okay, that's it. So the other people, I guess you don't have Bitcoin, right? And can you raise your hand if the same people ask you, what is Bitcoin? Yeah, the same. So what's super interesting, I think, when we talk about Bitcoin is that people are interested mostly in the financial upside that it represents, right? And there is a number, a survey that was super interesting, is that 9 out of 10 people in this country don't know what the Bitcoin supply is, which for us at the Bitcoin conference sounds crazy. But ultimately, do we know how many dollars are in supply? Nobody knows, right? So we don't care really about the technical underlying things such as the supply. What people want is an easy way to get the financial upside and ultimately adopt the revolution. So what we're doing at Fint is pretty simple. We make it very easy for you that are crypto aware to onboard your normies, your no-coiners, family members, and friends to crypto. So let's see how we do it. So first, we have a very easy fiat on-ramp, right? So you can connect your Bank of America account and select a deposit. Then the onboarding is pretty easy. It looks like a neobank, right? So we want to make it easy to adopt. So that's super important. And finally, one of the key aspects of our app is a multi-user interface so that you, who are crypto aware, can create accounts for yourself and sub-accounts for your kids, your family members, your friends who are asking you when to buy Bitcoin or when to buy crypto. Some other things that we also provide because we need some more upside, right? It's a seamless DeFi integration. So of course, this is really into the topic of these days, high inflation, right? So everybody is looking to work to make their money work. So we also provide high yields from the DeFi, which means your friends, your kids can get the DeFi yields without them knowing what is DeFi. And finally, for these people, we have also a learn-to-earn experience where they can earn rewards by just watching some videos. Okay? So how we do it on the back end? First, we use a stablecoin. We use USDC so that our friends, our families that are not into crypto don't face like this, right? They are not facing the volatility of our dear Bitcoin, our dear ETH, and so on and so forth, right? We also provide custodian wallets and sub-wallets so that even your kid can get a saving account in crypto. Again, they don't have to use it, but they will be happy when they are adult to get Bitcoin saved in their wallet. And we'll come back on that. High yield is very important these days, and especially for our project. We build this project mainly for our families who live in emerging markets, where we tend to make crap of the US for 7% inflation. In this country, it's 7% a month at best, and sometimes 7% a week. So high yields is a great way to provide these people who don't have access to DeFi in general, to get an incentive for them to save and make something out of their money. And finally, because it's super important, we are at the Bitcoin conference, we also have a way to convert these yield earnings into Bitcoin at a dollar cost average. So again, your vault for your kid can accumulate Bitcoin without ever spending the capital into buying Bitcoin. Okay. So a little bit about us. We're two co-founders. We're building a great team as well. We previously built a D-app that had 200,000 daily active users. We are Miami-based and backed by amazing investors. We just graduated from Y Combinator last week, so great experience. And yeah, some of our backers are like Khosla Ventures, Protocol Labs, and more. We're partnering also with the best, building on top of Coinbase, Circle, BitGo, and more to come. Right now, we are in a private beta in the US, in selection of states in the US and in Europe. As you can hear from my accent, I'm originally from France. And what we're seeing is pretty encouraging, about $2,500 in average deposits by our users, on which we have a 4% gross margin, so that's the business model. And what's very interesting to see is a viral effect, right? One account owner is bringing two members, so either a kid, a friend, a family member. We think this, we call it a K factor. We think we can grow it to up to 5. So meaning one member, owner, can bring up to 5%. And why this is so important? Because the market is huge. Right now, exchanges like FTX, Coinbase, Binance, you name it, they make approximately 40 billion in revenue, with only 100 million crypto owners. So there are 7.5 billion people who are still get to adopt crypto. And we think our approach of bringing you in the app, so you can bring your friends, your family members, it can get us to the next billion crypto users. And finally, just a slide for the vision. Before Uber, we never thought about using a private driver every day, right? Before Airbnb, we never thought we'd be traveling in different location and having a specific host for us. And with Fint, with the banker, this is the desk, right, of a bank at a branch, with the banker leaving their desk because I hope there is no banker here, but because they are becoming less useful, we think we are becoming the banker in this trustless world. So we are Fint. Feel free to sign up. Thank you very much.
How many users do you currently have?
So right now, as I said, it's a private beta, so we keep the secret. It's pretty small, so you can sign up right now. You will see because we have the waitlist. Yeah, we're not like right now. It's all about interviewing all the users. We launched 3 months ago, so we're just making sure the value proposition makes sense for them and trying to see how we can create that viral loop I was talking about.
We'd love to know more about your product roadmap. Can you walk me through how you're envisioning things 6 months from now, 12 months from now, 18 months from now?
Yeah, of course. Yeah, we have some idea, of course. It's hypothesis. I think it would be all driven by how we can get this product market fit, right? Some of the things we're thinking of are linked to how families are right now saving. So creating those saving accounts is super interesting for us. But there are many products from this group that we can create, such as a retirement plan, right? College saving for college, so like more long-term type of saving product. So that's some of the things we want to do in terms of financial product. In terms of actual features, there is some interesting thing that we already started, such as transfer of ownership. Let's say you have a Fint account, which you don't connect for a year. You can, before, of course, you don't connect for a year, you can declare someone as an emergency contact. And if you don't connect to the account, this emergency contact will receive the funds. So in case of accidental death or other, I think these are the type of thing, again, for this circle of families and friends, we think it's very important for the adoption of crypto.
And just to follow up to that, we'd love to learn more about your background and your co-founder's background.
Yes,
Like,
sure.
How did you go down the rabbit hole? Et cetera?
Yeah. So we met 14 years ago, master degree in computer science in France. And we built 2 companies together. I mean, one was a company we ran for 8 years, was a marketing SaaS that was acquired. And then we built also this DApp I was mentioning that was in the advertising space. We call it the Fair Advertising Protocol, which has the 200,000 DAU. We basically used to live in San Francisco, 2012, 2013. Got to meet some great people we talk about. Of course, at first, we didn't trust, and then we adopt. But yeah, it's been quite a few years that we are in the space. And we're building this because so many people ask us, like, how I can get into this, how I can learn, etc. And we think, like, sharing a referral link to Binance or Coinbase is great, but ultimately they don't adopt the whole product that is behind. So that's why we build this.
What is the valuation of the company right now, and how are you thinking about future rounds of fundraising?
So I'm happy to talk about the valuation in private.
Can you say how much you're raising?
We closed the round. It's a $3 million round, $3 million round. It's not public. We'll be announcing it. But for the valuation, I can share in private if it's okay.
It was a very good presentation so far, so good job.
Thank you.
Is the I saw that you had to go those 3 tiers of what you're doing, the education. How central is the like watch to earn, and how do you fund that part of it?
Yeah.
Like,
So
how does that business model work?
yeah. So right now it's just baked into our cost of acquisition. Like for these sub users or members of the account, we believe if we basically, in average, we will be spending $50 to acquire 1 account owner. If we can spend $5 to $10 for a sub account user, the economics make sense, right? So we baked into that. We think at some point, and that's probably part of the roadmap, like we can have partner to subsidize the cost of acquiring the sub-users. So either protocols themselves, platforms themselves that want to be seen by this secondary market population.
Mm-hmm.
Can you go a little bit deeper into kind of how you're offering yield on the platform and
Yeah.
kind of, what rates you're offering? It's still new, just kind of wondering. And then kind of following up on the product roadmap, do you have any kind of vision of Lightning integration so people can actually go and use the Bitcoin that they have on Lightning payments and games, websites, et cetera?
Yeah, great question. So on the yield, it's like the presentation from before is basically very similar. Yep. So that's like, we believe like the yield is pretty easy to generate right now for yourself, right? Yep. But for a company as well. So we use the same infrastructure more or less. And we try to find the best risk-reward platform, especially because we are a product for this group, secondary group, trying to avoid like very high yields that are more risky by definition. And for the Lightning, no, we don't right now. But I think it could be great. It could be a great way to develop the adoption, especially on the Bitcoin part. So yeah, it's a good point to think about.
Awesome, thank you.
Sure. Any other question?
Nope.
Okay. Thank you. Very good.
All right, good stuff. Thank you. Thanks. Good stuff. All right, I've gotten a couple of questions about getting in touch with some of the presenters after the show. Great question. Obviously, we're at a pitch day. We have kind of a range of kind of fundraising statuses and kind of age in terms of companies. The best way is going to be either to find them as they're coming off, or to email me, john@btcmedia.org, john@btcmedia.org, and we can kind of set up connections where it makes sense. Next up, from Bangalore, we have GoSats. Excited about this one, onboarding new users based out of India. Clicker.
Hi, good morning. I'm Roshan. My co-founder Roshni and I are building. Why is this not? It's not being shown over here. Okay. my co-founder Roshni and I are building the simplest on-ramp to Bitcoin for 1 billion people in India. GoSats is a Bitcoin rewards app. We help people earn free Bitcoin as cashbacks and rewards every time they shop in India. Roshni and I are co-founders as well as siblings. She's my younger sister and comes from a traditional finance background, having worked with few banks as well as a crypto hedge fund. I personally come with a lot of technical experience in the crypto space over the past 8 years. Discovered Bitcoin in 2014, and it just consumed me. Was the first CTO of the largest Bitcoin exchange in India, UnoCoin, in 2014, and ever since then, been completely occupied in this whole industry, building the crypto ecosystem in India. I'm happy to say that through GoSats, we've been able to onboard over 100,000 people to Bitcoin in India. So the prepaid card market size and the rewards card market is around $68 billion in India. There are a couple of ways you make money. We work with brand affiliates, and they pay us around 5% on average commission through every single transaction that happens. We also have a prepaid debit card, the first Bitcoin rewards prepaid debit card out of India. We're working with Visa for that. And users can use this card across any point of sale device in India or make an online purchase. And they get to accumulate sats on every single purchase that they make. We charge a couple of revenue streams for the card, a lower end and a higher end. So we launched last year, and ever since then, we've amassed over 14,000 daily active users. We're doing $150,000 in monthly GMV. We're also making $17,000 in net monthly revenue and are ramen profitable. Our app is extremely sticky, with 90% of our users coming back on the 7th day. So this is a breakdown of a market segment. GoSats is the first Bitcoin rewards product out of India. However, there are some fantastic Bitcoin rewards companies over here that most of you would be familiar with all these different logos. So we are trying to get, we feel we've cracked this whole adoption code for crypto in India. These are some of the biggest marquee brands that we work with. And it's a great way for all these different brands to start providing crypto to their own users. A brief roadmap. We've just recently launched the Bitcoin rewards card. Those of you that are familiar with UPI, it's this really huge payment network in India. And we've been able to work with a few of these regulators to provide UPI payments on GoSats so that users that make all these different QR code payments, they can start earning Bitcoin at every single purchase that they make. UPI has zero margins. We don't make money out of it, but it's a great user acquisition strategy. And then once we have this a bit of critical mass, we want to start offering this whole ecosystem for users because our users tell us, like, you know what, I know about crypto because of you guys. I do not want to go to an XYZ exchange and start buying Bitcoin, staking Bitcoin, and they want us to be this whole gateway to Bitcoin in India. Fortunate enough to have a great bunch of investors working with us and believing us on this vision. Ajit and Satvik are angel investors and very prominent in the whole Indian crypto space. So having worked with two of the largest Indian exchanges, I believe we've landed on an opportunity to create the easiest gateway for crypto in India. Thank you.
Given the current regulatory environment in India, do you think that's a risk to your business, or with the tax, et cetera?
I think it's going to work well for us because we are not seen as an investment platform. And according to the regulatory laws as well, if there's a tax deducted at source, it's only applicable if the withdrawal is over $150. And since we do micropayments, it doesn't really affect us. But of course, users can take the Bitcoin and sell it on an exchange. And that sucks, but that is what it is. We see volumes going down for exchanges, but for a business like ours, I think this could actually work for us.
In the competitive landscape, you identified some competitors, but you uniquely say that they haven't cracked the India adoption curve. Can you kind of explain more about the unique insight that you guys have on the market that allowed you to penetrate this market?
It's been 9 years since the first exchange was launched in India, or the first crypto company in a way. And crypto companies in India are still called exchanges, right? There's nothing beyond that, right? 9 years. India is a huge market, a great market, but for some reason the adoption curve has been really, really slow. And it's just that the Indian market doesn't want to get into something that is so volatile, something that they don't understand. And many exchanges haven't been able to crack that. I mean, everybody boasts of millions of users, but how many of them really understand what they're doing? So that's why I see like this is a great way for us to get a lot of masses onto Bitcoin. And even with the card as well, the regulators are working with us because we are not an exchange. We're not seen as this really like an exchange or some sort of a staking protocol. They see us as an e-commerce, as a shopping portal.
So thank you.
What's your game plan for creating more brand partnerships and creating awareness?
Yeah, so we see a lot of like this direct-to-consumer brands start talking to us. I mean, right now we do not have a plan for them, but we are working on like a portal or something where brands can just sign up and start getting added to the platform. We see a lot of these brands coming and telling us that, you know what, our customers want Bitcoin. Like this is the new thing right now, and it's a lot of millennials and the Gen Z that are the target market, and they're saying like we don't understand how this works. We don't have the infrastructure. We don't know how this works, but we'd love to work with you guys and start getting on board on your platform.
Do you have enough traction to know your cost per acquisition for a new user, and do you have an understanding of churn yet?
Yeah. When you look at like marketing spend, our cost per acquisition for a sign up is about $1. It's like close to $1. And then when we work with a few influencers, it goes up to like $1.5 on average. Yeah, and our retention, I think, so our transacting user retention at month 4 is at 52%, which I think is like really good because most e-commerce companies have a retention of like 25 to 30%.
But you're actually issuing a card for each one of those acquisitions.
Yeah, so they can use a card. They can also like shop with the platform. We have a Chrome extension as well. They can install the Chrome extension. They can shop with the brands directly as well.
So you're not giving a card to every user, only if they request that special?
Yeah, like they have to subscribe for it. Yeah.
Okay. How much are you raising?
We just we'll take that offline.
Okay. Any questions you guys have?
No. Great, thank you so much, guys.
Very good.
Thank you.
This one's interesting.
Thanks, Roshan. Let's go, GoSats. Next up, we've got Peter from Arcadico, coming over from Belgium. All right, Peter. There's your clicker. Add in here. Just click that guy to go over, the green button.
Hello, everyone. My name is Peter, and I'm excited to present to you today Arcadico, a decentralized finance protocol that offers self-repaying loans. Arcadico is a community-driven, decentralized application on the Stacks blockchain. Now, Stacks is a separate Layer 1 blockchain with a unique relationship to Bitcoin. While Bitcoin is extremely decentralized, it has an already large user base, it has an impressive amount of nodes and hash power, a lot of people depending on it for its stability and its robustness. Stacks is a more recent initiative. Now, Stacks plugs into Bitcoin in a profound way by positioning itself as a smart contract layer for the Bitcoin ecosystem. It can be a bit more flexible, experiment with features more rapidly, while Bitcoin needs to remain that stable store of value. Now, don't get me wrong, it's actually one of the core features of the Bitcoin protocol to be resistant to unwanted changes. But what makes Stacks so special is that it can read into the Bitcoin state, so it can actually react in its application on what's happening on the Bitcoin blockchain and do things, depending on whether certain conditions are completed there. Bitcoin uses proof of work, as most of you know, and Stacks reuses that spent energy in its own consensus mechanism called proof of transfer. Now, so how does proof of transfer exactly work? A Stacks miner spends Bitcoin on the Bitcoin blockchain, creating a Bitcoin hash, and he will include that hash in the Stacks block that he's mining. Now, that spent Bitcoin gets pooled and distributed over all the active stackers. Those are people who are using their STX tokens productively in this proof of transfer consensus mechanism. They're earning a yield in Bitcoin and helping secure the Stacks blockchain that way. So we think that Stacks is in a unique position to extend the use cases that are possible with Bitcoin by acting as a smart contract layer that makes an entire industry such as decentralized finance possible on Bitcoin. And decentralized finance is a rapidly growing industry, over $220 billion of assets, and we expect it to grow further in the next 5 to 10 years. Now, what's this other large number, you may ask? That's the total amount of stablecoin supply in the world right now. Stablecoins play an existential role in DeFi. So Arcadico enters the stablecoin market on Stacks by creating an essential building block to increase your liquidity, both for Stacks and for Bitcoin. What Arcadico does is take the existing stacking primitive and use your stacked STX tokens in proof of transfer as collateral to mint a stablecoin, USDA, the Arcadico stablecoin. The first thing a growing ecosystem, DeFi ecosystem, needs is extra liquidity. And by creating more liquidity on top of an already productive asset, we just bring immediate value to users and other protocols. We want to be a money Lego for others to reuse and integrate with. So let's get into this concept of self-repaying loans. If, say, in this example, you have $100,000 worth of Stacks, you collateralize that in an Arcadico vault, and you mint $50,000 worth of USDA at a 2-to-1 ratio. Now, since the borrowing cost of your USDA is 4% a year, but your collateral in Stacks is actually earning 10% a year, the value of your collateral will go up faster than the size of your debt. So after about 7 years, when the two bottom lines cross, that means your collateral has effectively paid off your debt, creating a self-repaying loan. Arcadico is a decentralized organization without central leadership. The core contributors include Philip, myself, and Neil, all of whom are computer scientists who've sold businesses in the past and have been in this space for over 8 years. We are supported by community managers, by growth strategists, by front-end designers, as well as our community. So our Discord community, they're very important to us. This is one of our core values. They help us analyze new ideas, implementations, they help us shape policy. And very important about Arcadico is that all the smart contract upgrades that happen need to pass an on-chain governance vote, kind of making us as the core contributors have kind of the same relationship as the Bitcoin core developers have, where they can propose new software, but eventually it needs to be adopted by miners and nodes. It's kind of similar here. It needs to be voted in by the Arcadico token holders. So what can we ask from you? We are already operational. We do not need extra funding at the moment, but rather we would like for you to use our protocol and join our community. So what can you do on Arcadico today? You can collateralize your Stacks, mint stablecoin while still earning the yield, and then perhaps join one of our liquidity pools. We've got liquidity pools for XBTC and USDA, Stacks and USDA. And when you do that, you can earn the Arcadico governance token. So we're aiming for $50 million in liquidity by the end of the year, and we're well on the way to meet that goal. If you're a bit adventurous, like I said, so we have the Stacks token as a collateral, but we also recently added Bitcoin. It's not the fully native Bitcoin yet. It's a wrapped custodial version called XBTC. So if you're a bit adventurous, you can come and collateralize that, get some extra liquidity. Look into Stacks, I would say, because it's a very interesting technology that has the potential to capture the hearts and minds of Bitcoiners, as its end vision has the potential to unlock native Bitcoin collateral, meaning your Bitcoin would never have to leave the Bitcoin blockchain for it to be used productively in DeFi. Now, that to me is a real game changer. Think about that for a moment. Never does your Bitcoin have to leave the integrity of the best blockchain in the world, but you could still be using its liquidity and access it in smart contracts on Stacks and its applications. That's where the end vision for Stacks and Arcadico lies. So yeah, I'd suggest looking into the technology. Perhaps if you think it's interesting, buy some Stacks tokens, come collateralize them on Arcadico, get one of these self-repaying loans. Yeah, if you're a Bitcoin holder and you're a bit adventurous, you can also get some USDA. Yeah, in general, this is an open invitation for all of you to come and join us in building this ambitious project that has the potential to revolutionize the financial world. Thank you. I'm looking forward to answer some of your questions.
Yeah, so what sort of returns are you getting in the self-repaying loans, and kind of how does that kind of compare to the landscape of yields people are earning? Technically, it's feasible or imaginable that people can, have the same sort of structure in anywhere where they have some sort of yield, ideally without kind of giving up custody. Kind of just wanted to see where you guys have stood up empirically and where you see that going in the future.
So yeah, as I said, the average yield on the STX asset in proof of transfer is about 10%. The borrowing cost is at 4%, so I guess the difference between that is what makes the self-repaying loan. As for what you can do with USDA, because that's kind of why you create extra liquidity in a new token, what's out there today, what you can do with it. Now you can farm in one of our liquidity pools, providing essential liquidity to the Stacks ecosystem. The returns on our liquidity pools at the moment, Stacks USDA and XBTC USDA, they are like between 50 and 100% APR yearly. Other than that, there's a bunch of exciting things coming up for our stablecoin USDA. As I said, like our vaults, you can collateralize assets and take a debt against them, but if your assets drop in value, then maybe they're not covering your debt anymore, so you always have to over-collateralize. In such an instance, we need people standing by to buy up the collateral in the vaults in what we call Arcadico auctions. Yeah, so that's kind of one use case for USDA as well, to buy collateral at a discount and gain, I think it's at about 10% currently that you get a discount for liquidating these vaults. And then some exciting developments that are coming up as well is that stable swaps are coming to Stacks. So soon we'll have other centralized stable coins on Stacks where we can create deep liquidity against. So you can go outside of the Stacks ecosystem with our stablecoin. That are some of the things we're looking forward to. Like our community, we kind of control this a bit ourselves, how much yield we want to assign to a certain farming opportunity. For example, we're going to incentivize that liquidation fund, and we're going to incentivize the stable swap liquidity pool. And there's an ongoing discussion going on about how big of a percentage of the emissions that we should send to that. And all of that is going on in our Discord community, and it's really a great way of working together with everyone who's interested in a project like this.
Thank you.
There's a lot of like opportunity costs in actually putting capital within the Stacks ecosystem, right? So if like, a couple of years down the road, it goes into a bear market, or like even if Stacks doesn't perform as you've mentioned, like what costs does that incur, and like, what's sort of the underlying situation?
Yeah, certainly. So the self-repaying loan dynamic, it kind of only comes into play when Stacks remains equal or goes up in price. If it declines, you're in a different scenario. If your collateral that you have in a vault declines too much, current barrier we've set is 150%. So if your collateral dips below that ratio, your collateral to debt, then liquidators step in and your assets will be sold. So you kind of have to monitor constantly the health of your vault, and if you're not too close to liquidation, either you pay back some of your debt or you add some more collateral. Those are the two options there. I think Stacks is definitely a growing ecosystem. I think the narrative DeFi on Bitcoin and its positioning against the Bitcoin blockchain has a lot of potential. So I'm somewhat bullish on the chain and on the idea. But yeah, like I said, some of those risks pertaining to the liquidation, that are kind of the main things you have to keep in mind when using a product like Arcadico.
Go ahead.
I was just going to ask, do you have plans to add a margin call notification feature?
No, not really. This is really difficult to do, right? Because we're just interacting with wallet addresses. We don't know who is who, really. We kind of really put this responsibility to the end user to monitor the health of their vault. It's definitely not something for the people that are stepping away 7 days and not looking at this. I guess people can build their own alerts. I mean, you can see when exactly, at what price point your collateral will be liquidated. So this is just a responsibility for our end users.
And you said you're not looking for money. How are you funding the team now, and how
so
will it go
raised,
forward?
Yeah, good question. So we raised some small round back in August, a little bit more than $2 million. But other than that, we're mostly looking for liquidity in our pools, trying to grow the USDA supply as well. Those are kind of our most important metrics to how we measure the success of our protocol.
And how does the company sustain itself? Like, what is the
So there's a
business
few
model?
revenue streams that come from this. For example, the borrowing cost you pay on an Arcadico loan is 4% a year. And also we take about 30% of the liquidation amount. So when a vault gets liquidated, its collateral gets sold, 30% is also going to the protocol as well. So there's a few revenue streams baked in, but it definitely needs to scale for that to reach any sort of meaningful magnitude.
Thanks, Peter.
Thank you.
Good stuff. All right. Next up, we've got FriendsVal, a company based out of Nigeria. And presenting for FriendsVal is Dr. Rick Goodman.
Thank you. Okay. How many of you are friends with people today that you were never friends with in high school, but you've connected with them on social media? Raise your hands. So there's a number of you out there that are connecting with these people. And the reason is because our world is changing, yet one thing is constant. And that's people do business with people who they like, who are like them. You'll buy a product from a friend of yours rather than go to the local discount place and save a couple of dollars. And that's the reality of when I said that on stage in 2019 at an international conference on the solutions-oriented leadership, and a young man, Collins, came up to me, and he said, Dr. Rick, I need to speak to you about something. I have to talk to you about something. I believe the same way. There's an African word called Ubuntu, which means I am what I am. I'm only as good as the next person, and they're only as good as I am. He said, now I have this idea, because there's problems in Africa, there's problems in the world that need to be fixed. And what's happening is the banking system is broken, causing financial inequality and exclusion. Well, he told me this, and we started talking about it. And on Sunday night at 3 o'clock in the morning, my WhatsApp went off, and it was Collins. And when your WhatsApp goes off, it's either your kids or something happening, or something came down, and he calls me and he says, Dr. Rick, I can't get the visa to get to Miami in time. Could you do me a favor and deliver the program? So I'm going to do the best job I can with the information I have, working with them over the last 2 years, advising them and seeing what they've done and the traction they've gotten. But the problems with centralization is the interest rates are 30% and above. And the reality is it's almost impossible to borrow from banks. The other thing is there's an absence of credit for any new customers, and there's a real result of financial inequality and financial exclusion. Well, welcome to FriendsVal. FriendsVal app connects people together. He had told me the story about in India how he saw that people were loaning each other money, families and friends. Again, people doing business with people who they liked, who were like them. So they created an automated peer-to-peer credit. Now you can lend money to friends, families, and colleagues utilizing transactions on the blockchain and Bitcoin credit cards for payments. It's assuring the transparency with the embedded protection against default on repayment. They can now use this app to start to connect people together, to borrow money to and from friends and start to open it up. It's called the FriendsVal. Well, that's the solution. And the Facebook credit here, it's just like Facebook connects people socially. Their goal is to have FriendsView connect people financially with Bitcoin credit cards. And it's an interesting concept. What they've done is because they're going directly into the banking system with it. The friends can lend money to friends. Parents can set up credit for their children. Start teaching them about fiscal responsibility, saving, getting involved in investing, and new different products that are going to be coming out. And also, colleagues can collaborate now on joint products with collaborative credit by borrowing that. And it's fully digital and centralized. And also, there's a two-step process. It's pretty simple. The process works like this. You sign on to the FriendsVal app. You just log into that app. Anybody could log into it. Step 2, you then invite your family and friends from Facebook. And there, you can set up weekly credit with family and friends, the trusted people who'll trust you. You could also invite colleagues from LinkedIn. And on LinkedIn, you could set up monthly and quarterly credit with their colleagues. Now, the blockchain credit cycle and how we protect our vows is pretty simple. Weekly and quarterly wallet protects customers from default on the monthly wallet, and the monthly wallet protects customers from default on the weekly and quarterly wallet. They've simplified things in working with the system. The blockchain, they customized the existing blockchain technology using Quarter.net to speed up the massive volume of transactions that can be handled weekly, monthly, and daily using Java and Kotlin. And they did this because they found that the existing public blockchains were too slow to handle the large number of transactions required to grow and serve their customers. Now, they saw that there's a monster market opportunity. In fact, that there's a $558 billion growth predicted by 2027, and the annual growth rate is almost 30%. The opportunity is ripe, and the way they're making the money is through those transactions. African continent right now is presently at 150 billion, and the Nigerian market, which they're beginning to penetrate, is at $40 billion. And here are some of the milestones. When I met him in 2019, he had this big idea. Now, his background's in cybersecurity, and he put together a team with 20 years of experience. And they launched their first B2B pilot MVP with 100,000 customers in partnership with Fidelity Bank and Axis Bank in Nigeria. They've already onboarded 14,000 customers presently. Then they were selected by Jack Dorsey for the Bitcoin Trust, the top 10 finalist startups in the category, out of 7,000 people. And then they commenced a partnership just recently, an engagement with CBA Bank in an e-credit solution for access to 27 million customers. They're looking to go directly into the banks, not only doing B2B, but also B2B2C. Some of these banks have people who've defaulted on their loans, and they're not quite sure what to do. And by getting those people onboarded with the FriendsVal app and using some of these credits, they're able to get some of these people off of the books slowly. And then obviously, April 2022, I know he wanted to be here because when I saw his face and the tears were in his eyes pleading with me to come here, and I said, you know, I'm going to have to study. I'm going to have to really do my homework. And, you know, when you see somebody like that who's had a dream, and he said, don't let the devil get me. And I said, we got the devil today. So we're going to be here just for you. Our competitive advantage, our biggest competitors are Moneyfellows and PiggyVest. The reality is we're the only ones that offer protection through the blockchain and instant credit. Once you get on there, there's almost an increase of a 300% cash flow that you have the ability to adapt once you start connecting to friends and family. And the FriendsVal business model, like I said, looking through the transaction fees and the total transactions, they're taking 1% from the B2C customers, from B2B, 2%, B2B2C, 1.5%. They're looking at the transaction fees on the credits, the float credit, Bitcoin credit cards, and also people that are going to do celebrity charitable events and taking a transaction fee off of that. I know they're also in talks directly right now with some Major League sports teams who are also looking to get involved with Bitcoin credit cards so they can give those to their best customers and they could use those to buy tickets, to buy different memorabilia, etc. The investment, we're raising pre-seed equity debt. We're currently raising $200,000 at $2 million valuation. The focus of where the debt's going to go is at 40% in tech production, capital expenditure 25%, 15% in sales and marketing, 12% in new hires, and 8% in the team salary. This is the team. Colin Eyes, the co-founder here, along with Shivangi and Vachib. Colin's been in cybersecurity for 10 years, and this kid, all he does is care about people. And you can tell that because people speak from the heart, and you can tell when he was speaking from the heart, when he looked at me and said, could you please be there for me? There was no way in the world anyone could say no to that. And when someone feels that way about a product, when someone is leading a company like that and has a higher purpose, that's the team that I want to get on. And that's the FriendsVal team right there. Any questions? that I hope I could possibly answer?
Yeah, first of all, thank you so much for being here and presenting on behalf of the company. I really appreciate you coming out here, and yeah, that's really awesome. So you said that the existing blockchains were too slow to handle the transaction volume. Just kind of wondering, do you guys create your own blockchain, or is it some other blockchain?
No, they're using the Court.net, and they've modified some of the blockchain to speed it up and customize it, but they're using the Court.net blockchain because they're already using it in Citibank and a bank in Spain. So it's already been used, tested, and they're using it on their customers, so they're working with that.
Awesome. So it's a fork of the existing.
Exactly.
Okay. Awesome.
Can you talk a little bit about, like, as a user coming onto the system, wanting to share whatever funds I have with friends and family or other networks? Can you talk about how I can evaluate the creditworthiness of those other users that I would be lending to?
Well, because you're going to be using the blockchain, you're going to have transparency. You'll be able to see the ledgers, what these people have. And the reason why they're going B2B and starting to go directly to companies, because they know people have salaries in companies. So they know that every month they're going to be getting X amount of dollars that they can then see in the wallet. So it makes it a much better avenue to work for right away than to just go peer-to-peer, although they're doing both.
Gotcha. So is it then on the person who would be lending money to understand, like, the risk when they're lending money out? Are they the ones that need to go and build that framework on their own, or is there some sort of model that,
no,
that we're able to look at?
It's all in the app.
Okay.
So once you sign up and you start inviting friends, you can see, because it's that redundancy of wallets. So you know what's coming in the weekly wallet, what's the quarterly wallet, what's the monthly wallet, who those people are. And again, this is all based on people do business with people who they like or like them. And this has been done in India for years and years and years. So that's really the form of it.
So are we getting this right, that you basically join the app and then you can offer to lend to your friends that you invite to the platform, and then
Correct.
you have a certain amount that you say is available, and then you set your own interest rate or
No,
fees,
you don't say your own interest rate. You just go in there, you can loan money to friends and family helping them out. Okay, because they can't go to the banks. It's almost impossible to go to any banks unless you have a fortune in those countries.
So aside from, like, obviously the plus of being a good Samaritan, like, what incentive would I have to go and to lend to friends and family? Is it just purely out of, like, the goodwill of your heart, or?
Well, that, and it's going to be protected because you can see when they got the money coming in and protected against default, versus if you're just giving Aunt B money and she decides doesn't want to pay you
Gotcha.
because
So
she had a
it's
fight
more of
with
a
you.
formality.
Yes,
Yeah.
exactly. So it's protected from default by those redundancies.
Is there a mechanism where, like, there needs to be a way to repay? Because, like, sometimes people have the money, but they still choose not to repay. Like, how do you counteract against that?
Well, again, that's where you see why we're doing the B2B. Mostly you see when these people are coming in with their salaries, when that money's in. So you're already tagging that in advance, knowing when that's coming into the wallet. And that's going to prevent the default.
And how do you make money?
Transaction fees.
Okay.
Yeah, the money's, so that's the beautiful part of that. It's straight on the transaction fees, you're making the money.
Okay, so I'll put money in, I'll lend to my friend. They won't pay any interest rate, but we'll both pay a transaction.
They'll pay an interest rate on the front, I believe on the front, but not on the, you'll get the interest rate.
Okay.
Yes, I think get the interest rate on the sale, but not on both ways.
Okay.
But again, I can't be exactly sure, so I want to make.
What do you anticipate the terms being on most of the loans that are being given out? Like, plus or minus a year?
Well, those, again, they go quarterly, monthly, and weekly, yeah, so they're not going really out there too far out. And that's that repayment cycle and that redundancy. And that's why you're also sticking within your friend cycle and within your collaborative cycle, whether it be LinkedIn or family members that you know. And then, again, the best part is going directly to the banks because the banks already have challenges with some of these customers there. They have default. How did they get them off the books? How did they get them fiscally responsible to repay? Well, if they have another option where they can have some of this and they know that they're going to get money each month and on it, get them off the books slowly, now it's opening up to more customers and millions of customers, in fact. Anybody else? You can unmute at any time.
It was a very good presentation. Thanks.
Thank you very much. Thank you so much for listening.
Thanks, Dr. Gibbon. Thank you. Love kind of the geographic diversity that's represented in the pitches today. We have 2 more companies presenting, 2 great Bitcoin-focused companies. One more time, if you want to get in touch with any of these folks after this pitch section, either find them in the corner as they're kind of coming off stage, stage right, or you can email me, john@btcmedia.org, and we can help set something up. Next up, we have Stacker News. All right. Welcome.
Cool. Thank you, John. All right, let's figure out how this works. Hello, judges. Green button. So I'm Keon, founder of Stacker News. My friend Alex made me that intro. This presentation is going to be short because Stacker News values your attention. Oh, they did not do the text right on that. That should be like a lightning bolt font there. But Stacker News is like Reddit, but we pay you Bitcoin, is basically the idea. The cool thing about Stacker News is a lot of our users are using Bitcoin and Lightning for the first time, especially, earning Bitcoin for the first time as well. Anyway, how does it work? It costs 1 sat to post, comment, or upvote, and users can tip other users arbitrary amounts, and your karma is sats. So like your karma on Reddit, but on Stacker News it's sats. So all of your upvotes and tips are withdrawable as Bitcoin. Additionally, all revenue that Stacker News earns from jobs, Boost, which is like kind of a native ad, or other types of revenue that we get, we pay back to the best users daily as yield. So every user will get a payment every day. We've had some users comment that they're making more daily on Stacker News than they are on Fold. So this is a little video of Stacker News. It's just me like tipping some users. I probably should have done a little more, but we have like nested comment threads and a variety of other things that you can do on Stacker News. So Stacker News is growing. Our monthly active users here, it's about 50%. The Bitcoin spent monthly went up quite high this past month. We had one user pay a 1 million sat bounty to another user for answering a question about how to turn some of their Bitcoin into no KYC Bitcoin. Additionally, we added jobs this past month, and that's also what really turned this on. Number in comments and posts is up, monthly registrations up, monthly visitors up, and monthly page views are up. I think this stat, they're up, they're also up 50%. So what's the vision for Stacker News? We believe microeconomies are better than moderation, much better than moderation. So we think we can restructure incentives in online communities such that moderation isn't required, ideally minimized. Additionally, we believe the private feed is superior to the common feed that you see on Reddit. It's like, you can imagine it kind of like private property versus a commons. And obviously, I think we all agree that private property scales better. The other thing I'm noticing is that digital payments and community yield really interesting things. And so like an obvious example is marketplaces, but more widely, basically everything becomes an economy of some kind. The other big vision item that we have is that we want to use Bitcoin to build an unstoppable decentralized social network. There are problems in decentralizing a system that I believe can be addressed using Bitcoin, and so we'll be taking steps to build that. Stacker News is a project out of Pleb Lab, which is a Bitcoin accelerator in Austin. Sign up at stacker.news. My presentation is short, as I said.
I think the job board is a great idea for user acquisition. That's awesome. Quick question for you. So you mentioned that all revenue goes back to the best users. How do you make money?
Well, we are making money, but we're just currently paying it to users.
Okay, gotcha.
So eventually, we will take some cut proportional to the value that we're providing to our users. Right now, we see our users as providing disproportionate value to our software. Eventually, because what matters right now is really the network effect and building the network effect. And so perhaps once that's at scale, it makes sense for Stacker News to take some proportion of that, relative to the value that we've created in terms of the software. But right now, I think it's really our users are what makes Stacker News valuable.
Yeah, so with the goal of onboarding millions to Stacker News, right now you mentioned that to post something you have to pay a fee, it's one sat, then ultimately people can stream sats essentially to the content. So at some point right now it's limited to people that already have a Lightning wallet, Bitcoin wallet already set up, so there is a little bit of a barrier to entry. What are your sort of plans in kind of making this accessible to somebody who's kind of never heard of Bitcoin, has no clue how to make a Bitcoin payment? And
yeah, well, your first point isn't true. So when you're on Stacker News, you have 2 posts that are free and 5 comments that are free. So you can bootstrap an account without actually having Lightning, and many users actually do that. So, but the other thing we could do is we could obviously offer a small. We could start every user with some balance as well. That there are potential attacks there, obviously, like a Sybil attack of some kind could really, like a bot attack, could drain all of that. So that's why we don't do that currently. The other thing that we've introduced is invite faucets. So users can create links to invite their friends who maybe aren't familiar with Lightning and Bitcoin, and that user is sponsoring that user's account. And so that user could say, this link will give anyone who signs up with this link 100 sats. And that way they can get started.
Thank you.
Yeah.
Is the login identities all centralized, or are you using the wallets to do that, or?
I'm using so it's up to the user. So we have a Twitter-based login, we have a GitHub-based login, we have an email-based login, but we also have a Lightning-based login. So we use LNUR auth for that. A lot of users really like that. We supposedly have the best implementation of that, or did a year ago when we first introduced it.
That's excellent. Thank you.
Yeah. I can dance for the next 3
Thank you.
Thank you, John.
Thanks. Stacker News. All right, we have one more company presenting. My name is John Riggins, by the way. BTC Inc. Is the company that's putting on Bitcoin 2022. Kind of a confident company name. The next company presenting is, I think, an even more confident company name, the Bitcoin Company. Ben Price is presenting for the Bitcoin Company. Hi, Ben.
Thanks, man. All right. Pretty nervous, so hopefully this goes well. I finished this deck about 20 minutes ago. So we're the Bitcoin Company. We've got a few of our employees out in the audience. We're at booth 106, right to the left of the entrance. Come say hi. We're here for a big mission. I think this is the adoption track, so we want everyone in the world to own Bitcoin, because Bitcoin is for everyone.
After this pitch.
So we've got a bunch of slides here. I don't know, it might be too many. So what's the challenge here? With adoption, we all want hyper-Bitcoinization. I think we all see the vision, the dream of like Satoshi. We're all moved by it, hopefully. At least everyone at the Bitcoin Company is. But like, how do you achieve this? So reasonably, it's not going to happen overnight. We all want to kill the banks. We want to kill payment networks. We think Bitcoin is the solution, but it's not going to happen overnight. People need a reasonable alternative to drop their Bank of America, drop their Wells Fargo, and move towards a Bitcoin standard. And so, like, how do we help build something that will enable this? We think the solution is providing all your traditional banking solutions and all your Bitcoin solutions in one place. So instead of treating Bitcoin like an investment, like Wells Fargo or Bank of America, where you're sending your money off of their bank to purchase some or use some, we're going to treat it like a native currency, which it actually is. El Salvador is a great example. So we're trying to build an easy, one-stop shop, kind of Bitcoin super app, a place where you can get all of your banking services, whether it's checking account, saving account, direct deposit, everything you've come to expect from your shitty Wells Fargo, and everything you want in a new age financial company. Bitcoin, buy, sell, hold, lightning payments, remittances, everything in one place. But that's hard. That takes a while, and so there's like a journey to get there. You can't roll all that out in one moment. But at the end of the day, the goal is to build a viable alternative, a reasonable way for people to opt out of the traditional financial system and move towards a Bitcoin standard. And that's what we're building. We have a big vision. I get a lot of shit for this. We try and build everything, but we're moving fast. There's a lot of companies in this space that I think do want to bring Bitcoin to the world, but it's the pace of innovation that you really see slow down once you reach like enterprise level. I used to work at Visa. I built them tons of Bitcoin tools. Best case scenario, it would have taken 5 years to get to market. I think Kraken took 2 years to roll out their Lightning integration. We're going to have that next week. So while we're small and nimble, we're going to move fast. We're playing catch up, but we're getting there fast. So we want everyone in the world to have Bitcoin, not just people in the United States, not just the banked, everyone. The team is actually a lot bigger than this, but I needed to get a deck together. So our core team consists of Ben Carman sitting over there, super well respected, super genius. He runs the Austin Bitcoin meetup, open source contributor, Bitcoin S, building coins. He can literally build anything. If you told him to hack the Russian nuclear codes, he would do it. Connor, we just snagged him from Microsoft, so we got someone from Bill Gates. Basically, them together, we put them in a room, we can build whatever we want, front end, back end. Leah's been crushing our designs, so thank you, everyone. We have a ton of people behind the scenes doing education, research, community development. We have other designers, other mobile engineers, but this is what we could list. Our technical advisors are really solid. We want to build fast, but we don't want to accumulate tech debt. So we have some of the brightest people in the industry: Lisa Negat, C Lightning developer for Blockstream; Evan Kaludis, Lightning Labs; Tony Giorgio, privacy expert; Mark Boyeron, general counsel for DYDX. He's been helping us on all the legal stuff. The roadmap, what are we going to do, what we've built. So this last month, the reason this deck isn't so great is because we've been building. We're trying to get shit out for you guys. We want to build the things that we want. So to start, we built something that you guys have probably seen before. It's a gift card marketplace. You can purchase gift cards with Lightning and earn Bitcoin back. Pretty simple, but there's a revenue model there. We can start paying ourselves. We can fund the other development that makes sense. So today we have about 150 big brands. I paid for our Airbnb, American Airlines, Uber. Everything is live today. You make your purchase with Lightning, Visa card, or like debit cards coming soon, but essentially we get a discount on our gift cards, we sell them to you, and we give you back all the profits in Bitcoin. So the flow is essentially you end up with a card number, a PIN number. Instead of checking out with Visa or MasterCard or Amex, you check out via Lightning and input a gift card code. We're like hacking the traditional financial system to give you Bitcoin back. That's the first product. Rewards redemption's easy. You basically have a withdrawal or a rewards wallet that you can withdraw on-chain at any point. But what else have we built in the last month? The reason we're here is because we're building the products we want to use. So I think later today we're rolling out our Shopify integration. We tested it out with our merch store. The top 150 brands are great. Airbnb, Uber, awesome. Amazon, great. We get a lot of money from them. But Bitcoin's for everyone. We want the long tail. We want to be able to service everyone. We want Joe's Coffee Shop. We want BTC Pins. We want to sell tickets for Bitcoin Magazine, the conference. So how do we do that? We started with third-party integrations, creating this base layer where anyone could sell gift cards on our platform and reward their loyal users with Bitcoin. And so we handle all the back end. Today, we're rolling out our Shopify integration where anyone with a Shopify store can now sell gift cards in our app, give their users Bitcoin back. Give their users Bitcoin back and kind of like get promoted to a Bitcoin audience of, kind of new age tech spenders. That allows merchants the long tail to sell gift cards. It allows people like Bitcoin Conference to sell tickets. BTC Pins can sell pins. It doesn't matter. We can sell whatever the hell we want as long as there's a voucher code. The big one that we've been working on and we finally got out, and I think is live right now, hopefully, Carman did it, is we just launched Visa cards. So the rewards marketplace is a little bit disparate. There's gift card providers, there's Visa card providers, there's card-linked offer providers, there's affiliate deals, Lolly, BitRefill, Fold, you've seen them all, Pay with Moon. We're consolidating that entire marketplace into one simple experience. And the next step was Visa cards. So we offer now virtual Visa cards live in the United States, but the big thing is we also offer them internationally. Finnt has some weird rules and regulations. You can't use funds internationally. So when there are rules, you go around them. We set up a subsidiary in Canada, and they don't have that same rules, so we're now able to sell Visa cards internationally to everyone in the world who is living on a Bitcoin standard. We are rolling out physical cards soon. Right now it's virtual only, but you should be able to download the app and get access to this Visa card. So, you might not have Joe's coffee shop down the street, but you can always buy a Visa card with your Bitcoin and live off that without a bank. It's pretty fucking cool. So what we're building next, we're moving fast. We want my mom to be able to use the platform. That's the goal. This is for everyone. It's not just the people in this room. Not everyone has a Lightning wallet. So we just partnered with checkout.com to allow gift card purchases with your Visa, MasterCard, Amex. The next thing we're doing is we're rolling out card-linked offers, which is this really exciting thing that lets you turn all of your credit cards in your wallet today into rewards cards. So what that means is you pull out your Amex, you enroll it in our program one time, spend 5 minutes, and from that point on, you spend $3 at Starbucks, $10 at wherever, and we just give you Bitcoin back. It's this really cool kind of low-touch way to give people rewards. After that, we're building a browser extension, and we have some really cool partnerships coming with some top 5 companies that have not been crypto-friendly before. But I think my time at Visa has prepped me to talk to Fortune 100 companies and tell them Bitcoin's not evil. So we've been able to do that too. So card-linked offers, I'm going to kind of breeze through this because I'm running out of time. This is the enrollment flow. You link a payment method. You see if you spend $20 at Apple, you get $10 back in Bitcoin. Maybe it's Jimmy John's, maybe it's Starbucks. It doesn't matter. You enroll your card. If you shop somewhere, you get Bitcoin back. Structures, you get Bitcoin back on everything. You can come in and boost your deal, and sometimes you have to activate. Transaction flow, boom. Swipe your card, you get rewards. So what are we building? The goal is not to be a loyalty company. The goal is to give people a reasonable way to drop their traditional bank. And so we're starting with loyalty because that's the highest top of funnel. If I built you an exchange, you tell me I have Coinbase, I have Cash App, I have Strike. It doesn't matter. You don't need another exchange. But everyone loves free Bitcoin. So we started with gift cards, Visa cards, third-party Shopify integrations, card-linked offers, web browsers, gamification, international markets. We also just launched OpenSats, so we're giving back to the Bitcoin community through like a monetization strategy that actually works. We're solving the free rider problem by allowing people who are using Bitcoin to give back to the people building on Bitcoin. Next, we need to do research, education, teach people like my cousin, the people who aren't as familiar with Bitcoin, that it's a better alternative. And then we're building banking and exchange services, the full stack, kind of a Cash App, better rewards. So what that looks like is your checking account, your savings account, your Visa debit card, which we've been approved for, your direct deposit, bill pay, and all of this can be connected to your Bitcoin. So it's not like you are buying Bitcoin separately and trying to make it fit into your bank. If you want to deposit Bitcoin Saturday at 5 p.m. and load up your Visa card so you can swipe it, you can do that. If you want to do it Friday at 5:01 p.m., great, you can do that. We don't treat you like a crazy person because you want to actually use your money. So that's the banking part. That gives people a way to opt out. And then we're going to give you the Bitcoin buy, sell, hold, all the exchange services. Later on, once we get all that bullshit out of the way, we get to go have fun on Bitcoin. We get to do remittances, Lightning, DLCs, everything. And so even though I get shit for that, that really is the goal. We want to build a one-stop shop for Bitcoin. I'm going to cruise through this because I think I'm out of time. The gift card market's huge. The CLO market's huge. Banking and exchange, it's one of the only markets, Bitcoin, where your total addressable market is literally the whole fucking world. Coming soon, Lightning withdrawals, a partnership with a company that rhymes with Schmamazon, browser extension, remittance products to international countries so you can pay a Lightning payment and immediately have pesos in a Mexican bank account. That would be cool, right? All right, I think that's the end. Download our app. We're live in the App Store. Thanks. I have 20 seconds for questions, apparently.
Awesome presentation. Very ambitious roadmap. Where do you want to focus in the next 6 months?
Yeah, so we do have a lot planned. Our focus is crushing loyalty. Literally, we launched a month ago. We've rolled out Visa or gift cards. The last 2 weeks, we rolled out Visa cards, third-party integrations. We are already approved for card-linked offers. We have all the designs, all the stuff ready to go. We just need cyber insurance, which is a bitch. So we're going to go get that, and that means we can partner. We're like basically partnering with Amex, Mastercard. It's through our partner Fig. So we're going to like consolidate the loyalty marketplace and then go heads down and focus on building out the banking services and the Bitcoin services in the next 6 months. Ideally, we don't want to raise as a loyalty company. We want to raise as a full stack banking application that gives our users Bitcoin back. So it's really focusing on number 4 and 5, or 3 and 4 here, banking and exchange. Just partnering with Prime Trust, talking to Cross River and Evolve to kind of move towards a better bank. Prime Trust is kind of a proof of concept hack that we can roll out fast, but we want some better services.
And how much?
So who's funding this? Oh, sorry. Yeah.
Same
I mean,
question.
we didn't see any like investor lists
yeah.
or anything.
Sorry.
So ultimately, like who's funding this, and like how operationally and capital intensive is this play?
So I left Visa last January and self-funded this through probably like the pre-seed phase. We probably raised like early seed, a little bit too early for that. But we raised 2.1 million in November of last year. Honestly, it was a very distributed round. We have people like Fulgur Ventures, Lightning Ventures, CT, Mimesis Capital, as well as like a broad swath of Bitcoin angels. Revolution Capital was our traditional, or Revolution Ventures was a traditional VC. We have enough runway to get through the banking and exchange services. I think it'll be a little bit tight, which is why we're going to move fast, go heads down. But it is pretty capital intensive. The good news is we have all the legal regulatory work out of the way to get banking exchange. Basically the next year we have planned, ready to go. We have our lawyer memos and everything that the banks and exchanges need. We know how we're going to expand internationally. We have our subsidiaries set up. We're live with gift cards, Visa cards, CLOs soon. But it is capital intensive, specifically CLOs, because we don't get paid. Gift cards is a pre-funded dollar account. You know, we are directly integrated with Kraken, OKCoin Lightning integration, so we can hedge and move money back to our gift card kind of funding account. But CLOs in particular are tough because of chargebacks. We don't get paid out until 60 days after you actually make your credit card swipe at Starbucks. And so what that means is if we have 100,000 users who are making $10 a month, we have to pre-fund $2 million in basically rewards and loyalty, because we don't want price exposure to Bitcoin. If it goes up in price, we're screwed. If it goes down in price, I guess our users are screwed. We're all screwed. So that part is a little bit tougher. If we grow the way we want, it's going to be tight. There's a lot of capital costs in the loyalty side of things, but legal, regulatory, all comes with banking and exchange as well. So it's not the cheapest thing in the world.
So are you raising capital now, or?
We are starting that process. I think that, you know, if I really want to show some progress on the banking and exchange side, so we're not just a, you know, one-stop loyalty and rewards company. That really isn't the goal. The goal is to be a full stack Bitcoin super app. And so I know that if we go heads down, we can get that done in 3 to 4 months. And I want to raise as a you know, Strike plus rewards, Cash App plus rewards. So we will be raising capital, probably our Series A here around August or September.
Great, thank you. And on the insurance, you said it's a problem. It shouldn't be a problem.
It's not really. It was tough to find a broker that, you know, we didn't have to explain what Bitcoin was. Our booth is actually right next to an insurance company that offers cyber insurance. But basically, Fig, we have everything in place. They just need to see like 10 different lines of coverage that they threw in the contract at the last minute. So we're ready to go on that once we just get approvals. It should be about 2 weeks, actually. So at that point, we basically have combined Bit Refill with the gift cards. We have like kind of Pay with Moon with Visa cards. And then CLOs, I don't think anyone else is really doing. Maybe Lolly's making an announcement this week. So we're consolidating rewards, and then we're rolling in banking and Bitcoin. That's what's going to happen in the next 6 months.
Judges? Good to go.
Good, thank you.
All right, Ben, thank you.